The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another special edition, and actually a very special 420 edition of the Power Trading Hour.
Dave's not here!
Yes, long before Super Troopers, there was Cheech and Chong. But, well, we'll talk about it. Anyway, we're off 20 points on the S&P cash. Started to bottom out, 1.5. There hadn't been a lot of volume. As I said, off 20 on the S&P cash, 176 on the Dow, and the Nasdaq's off 77. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Didn't hear anything. There it is. A little bit. Okay, so what do we have? Well, it's certainly in volume, 3.7 billion shares so far today. And it just looks like Apple has decided to kind of rub its stink all over the market. A handful of other stocks too, but we'll talk about that as the show progresses. But that's about it. You know, could we have a little bounce? I think, man, this market took a little bit of news, maybe political, maybe Apple, and decided to start running with it. And just kind of a very light push down, but that's all it took. And I guess when you have a stock that's 15% of the NASDAQ, it's tied to literally everything in some ETF. We had companies that were too big to fail, but is there a stock that can just be too much of too many indexes out there? I think Apple certainly is it. I think maybe in the future some of the regulators would figure out that you don't want one stock that can sink everybody with ETFs involved these days. And that's kind of at least my take on it a little bit today. Of course, Monday and Tuesday we go into into options rollover, where we get a lot of options set up for all of the summer, or most of the summer. So we'll see what these guys are looking at Monday and Tuesday. Wednesday, we start seeing the market move in the direction that it would be after options, after everything else is done and options rollover. And then, of course, we go right into kind of the fun buying spree a few days after that. So that takes you to the 25th, and we got the 26th and 27th without a lot of 25th, 26th, 27th, without a lot of direction other than earnings. Then we go right into fund buying, which is the 30th, 1st, 2nd, and 3rd of April. So normally you get that 26th, 27th, you get the markup, which is everybody knows the money's coming in. Only a schmuck would allow our IRA people to get in at lows. So bid it up, let them buy in, and then sell in after it. Is generally the war cry. So we've got that. We've got earnings, got a handful of stuff. Next couple of 2-3 weeks are going to be about earnings. And just everybody kind of in this lackadaisical mood where they just all decide up and not to buy, but not to sell. We should be seeing, I'd say right now, for the kind of damage that we've seen, we should be seeing somewhere around 5 billion shares on the U.S., the CBOE total equity market volume summary, and just 3.7 billion shares for not a lot. A little bit of this may be some worries that people are maybe on the wrong side of the dollar. It's back up above 90 on the DXM8 contract, although it got to, what, 920. But my thought is that the government, at least the U.S. government, is trying to stabilize it somewhere around this $90 level on the DX. So we'll see about that. And of course, when we go back and look at some other things, I think some people could start getting a little bit nervous. Where is it at down here? I'm looking for it. Come on. The TLT. TLT's back in those 118s. We'll take a look at it in the chart today. But I've been waiting for this thing to go back there and test that 116. It got close, 116.50. We had a nice run. But I think there's a lot of gravity down there at that 116 level, and I think it needs to test it. I'm not going to say that it breaks it, but it certainly looks like that if it comes down this time, if it was ever going to break it, it will be this time. If it holds, then I think you've got the ability for this thing to go back up to 126. But right now, I'd say 60-40 that it breaks that 116 level and goes down. I think there's some numbers around 115.5, and that would be kind of interesting, I think. And the question is whether people are going to get out of bonds and run back into equities. That's at least one theory. Okay, we've got a lot of stuff. What word did I say? Okay, got a lot of questions. Let's get a few things done, and then I'll get to all the questions in the den. And, of course, you can always email me at path@tfnn.com and call me at 877-927-6648. If you're east of the Rockies, and if you're west of the Rockies, 877-927-6648. The exact same number. I'm an Art Bell fan. What can you say? Okay, what else did you have out here? VIX is up a little bit, but that was kind of interesting to see this. The VIX is just up 50 cents or so. So not a lot of people thinking this is the beginning of a huge down move. I didn't see anything last night. I went through a lot of charts to try to set something up. I never really saw anything that I liked. Market was a lot weaker than I thought, too. I thought we'd be back up at 27.10 this afternoon. But, man, I think with Apple, there's just nothing you can do. It infects everything that it touches when it heads lower. 165.91, which is down almost $7 and 4% on Apple today. Tesla, another one out here that's kind of sad. Was trying to get back up to 300, down $7, 292.70. But, you know, if we were seeing the wheels fall off the wagon, wouldn't Tesla be down $40? Wouldn't a lot of these others be down a lot more? That with the light volume makes me think that we're going to go sideways for at least for the first few days of next week, and then start trying to make back up into that 2720, 2750 area, maybe for fun buying. And that may be the point where shorts really would pay off, but we need to get up there with a light volume. The market's just playing with me. Well, at least someone is. I'm not alone. What else do we have going on? Oh, we've got history.
Then it's all just a little bit of history.
Hey, I'm out of time. I messed up. I'm out of time. We'll be back to do history all over again.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
On this day in 1902, Marie and Pierre Curie successfully isolate radioactive radium salts from the mineral pitch blende from the laboratory in Paris. This pitch blende, I don't know if I'm pronouncing it right, I think it's French, was tossed at the foot of many mines as waste product, especially going after other metals. And there are still massive piles in some mines in Europe where this was happening. In 1898, the Curies discovered the existence of the element radium and polonium in the research of pitch blende, or pitch blende. 1 year after isolating radium, they would share the 1903 Nobel Prize in Physics with French scientist A. Henry Becquerel for the groundbreaking investigations of radioactivity. He would die, and she would go on to create X-rays and a lot of other stuff. Did she get more? Can't remember. I think she got more. Another Nobel Prize for, maybe it was X-ray photography. Can't remember now. I remember I went to their lab, and they show you a lot of it's been taken out because everything was radioactive. But they always get the Geiger counter out, and they show you the doorknob on their lab was still radioactive after all these years. Not that bad. It's not going to do anything to you. But on this day in 1902, we understand, or we start to figure out there are things that we don't understand, and there's things that we cannot see that will affect us in 1902. Okay, so let's start getting to the question part of what's going on out here. What else do we have? Okay, so let's get back up here. Okay, big cap, 3 weeks. Do you think a big sell-off like bank stocks once did in earnings? I think we're going to see a bifurcated market in technology. Semiconductors had kind of the worst bounce of any thing that we'd seen in my sector oscillator charts. I was showing that out there today. Maybe I can actually pull that up. There it is. Let's try to get this up in front of you guys so we can see it. But okay, this, if you want to think about this as just the composite of all the stocks in the SMHs, their 9-day moving averages, you can see that why we only got about a 382 retracement in the SMHs itself. Everything went pretty much up to the and above the 9-day moving average, and you just didn't get that much going on in that sector. So this was a very weak bounce. Everything went above its 9-day moving average, barely made it, and then pulled back in. There are going to be some parts of the of this SMH that do well, and some places that don't do so well. Let's take a quick look at the volume on the SMH today. And I'm going to talk to Tom O'Brien about that at the 3:30 hour. I think you want to listen. But there's a company out there that's selling everything it can, and people are even paying higher than the normal price to get them. They're in such sharp demand. So we'll talk about that. So I think you want to be there with us at 3:30 with Tom O'Brien when we do the Tech Insider Hour. So what are we doing here today? Well, you certainly have the kind of volume you needed yesterday, 16.5 million shares. Today you just have 8 million shares, but you're basically going into a 9 million share day on April 4th and a 7 million share day. 93.88 certainly is possible. You certainly have a lot of volume there on that. Could we see the SMHs before a lot of these hit that low? I think we could, but let's take a look at some of these other ones. SWKS, Skyworks Solutions. Now this one's starting to break below the previous low, but it's doing it on a lighter volume. You want 5.4 million shares. You got 3.1 million shares now. Energy was about the same on the way up, on the way down. Just because Apple isn't selling smartphones doesn't mean smartphones aren't selling. But this is kind of one of these sectors where you throw the baby out with the bath water today. I'm not saying that these things are that great, but I'm saying that some of these things are doing a little bit better than others. Avago Technologies, AVGO, the Broadcom company, and about 20 others that got rolled into it. This one's got a monster PE, and I was going to think that if these stocks are really going to just blow up, that this would be the first one. Now, you had some fairly decent energy off that March 13th high. You tested the 7.7 million share low on February 6th in Avago with 5.3 million shares. You bounced. You didn't get a lot of energy, but it wasn't bad. Now you're kind of coming back down. Today's volume is kind of light, 2.6 million shares. I think you could see a little bit more pessimism. Everybody get on the wrong side of these things, and they may have be just a little different, and that you're probably going to get some bounces out there. The question is, are people going to still buy smartphones? The answer is probably yes. The problem is, are you going to spend $1,200 for one like Apple wants you to? Are you going to spend $200 for the earbuds because they didn't put an earphone jack on it? I think there's a lot of reasons to think that Apple may be kind of a special case. And unfortunately, it's part of literally every index that there is out there. So everybody's going to feel the pain by that one stock. But I think if you go back through these other stocks that surround the cell phone space, things aren't really not that bad. Qualcomm's probably a little happy today in the fact that everybody that was pounding on them to make Apple look better, a little different. Looks like this is going to find $50.02, which is the October 31st, 2017 low. You had almost 30 million shares. You got about 7.5 million shares today, so you're about $1 away from testing a fairly important blowout low of Qualcomm, and this actually may be setting up fairly good. The energy down was a little bit much, so you probably want some kind of consolidation, but these guys kind of own 5G, and right now they're basically, the blood is in the street. Question is, how long does it take for these to base out? Is it a couple weeks? Is it a couple of months? Do these things start rolling next fall? I think next fall they're going to be, that's going to probably be the latest that these things really start moving for the 5G rollout. You're going to have probably 2 or 3 or 4 years of very good business with these companies, no matter what, in that sector. So keep a look at those. We'll be back in just a minute. We'll get to a few more questions, but I'm not really so worried about it. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And of course, this is 420.
These high school boys and girls are having a hop at the local soda fountain. Innocently, they dance. Innocent of a new and deadly menace lurking behind closed doors. Marijuana, the burning weed with its roots in hell. In this film, you will see the ease with which this vicious plant can be grown in your neighbor's yard, rolled into harmless-looking cigarettes, hidden in an innocent shoe or watch case.
Oh, Reefer Madness, a movie that everybody should watch. Anyway, we've got some more questions coming through. So Microsoft reports Monday. Rob in South Carolina says pre-AM. They have soundly beaten estimates for 3 straight quarters. Think of the time they blow the doors off. Does this look like a buy to you? I'm not a big fan of jumping in front of earnings. You know, if you wanted to buy this thing, you wanted to buy it on the on a fairly good test of the previous low, and you really didn't get a great sign. But you know, that $87 level would be the only level that I could hold through earnings. I couldn't hold this one through earnings if I was up here at 95. So I'm not a fan of chasing these things. If it breaks above 100, my guess is you're going to be able to buy it back at 95. Could it go to 103 on earnings? I think it could. Literally, there is only one company that is doing just about everything that they touch perfectly, and that is Microsoft. And so, you know, they've stayed out of the political fray. They've been able to continue their journey back to the roots of continual and never-ending improvement. And I think that's really works well with this company. They got rid of bombers. We're going to have one major update every 3 years to we're going to have an update every 6 months or a year. We're going to continue to keep updating and making the product better and better. But we're not going to wait for 3 years to do it and then have a bunch of people that have never upgraded anything try to upgrade their machines again. I think it was a stupid idea when Bomber went to that model. And you don't want to wait 13 years between major upgrades of your operating system. I don't see things just move too quickly. Anyway, they're doing everything great. Does it go $5 higher? Probably. Probably opens up at $100 on Monday morning. I just can't see the risk reward for 5%. So that's it. The options are probably too expensive. So, you know, I just, again, if I was going to buy it, I would have been down here trying to buy this thing down at 88, not up at 95 today. So I don't chase. And it's one of the hardest things that I've had to learn over the years of trading. There's always going to, it's just like a bus. There's always going to be another one along, another 5 or 10 minutes. There's a lot of other stocks out here. No reason to chase this one. Okay, CLF versus ASK. CLF had earnings this morning. Where's the picture? What picture? I show that I'm actually showing my chart. Is that what you're saying? Don't know. Okay, hopefully everybody sees my charts. Maybe someone will say yes or no. Oh, I didn't have any picture with the Reefer Madness clip. Okay. What else did we have? Okay. Now, you got Cliffs Natural going up to the previous high of $8.17. That had 28 million shares. You got 24.6, so you're going to basically tie it. Energy is a little lighter than the energy down off that March 2nd high. So right now, you kind of have a decent trading range. Could you see 915 on it again? You could. Let's take a quick look at ASK. Maybe AKS. Is that what? I bet that's what he's actually saying instead of ASK. You know, this thing had its bounce. It should have had a much bigger bounce, and that is the lesson that I think the semis can tell you, is this thing should have bounced earlier. It should have bounced bigger. Maybe you're going to have a little bit of an ABC on the way back up. Maybe, what, $5.40, something like that. If you get the little pullback and the volume's light, I just think that there are a lot better stocks. We're going to look at a few of them here before the end of the day. Good looking chart. A lot of these things have just kind of stalled. And the question is, are these things just waiting for earnings to get through before they go higher? And it certainly could be. Okay, LQD. Corporate bond funds. Tells me that this is a good looking chart out here. 115.52 is the March 21st low at 10 million shares. Testing that today with 4 million shares. But no sign that this thing is bouncing yet so far. But not a bad looking chart. Energy's about 20% lighter off this April 10th high. So it looks pretty good. This is the investment grade corporate bond fund. But down at its low. I would have liked to seen a lot of reversal here. Your volume's light. So you want to kind of wait until this does effectively close very well over 115.52. So maybe it does it on Monday or Tuesday. But good looking chart. Can't argue with that. It tells me that this thing has found some support at this level. Okay, I got a bunch of stuff. Okay, so which one would I rather be in? I think CLF certainly looks better from its chart. It did what it's supposed to do, where AKS isn't quite doing that. And, you know, the stock that acts correctly is the one you want, because most likely in the near term it's going to act correctly by what it does and let you know when to get out. A stock that doesn't act right, like playing with a poker player that doesn't know what they're doing. They may just call you, roll all in, or do anything, and they're more likely to take you out because they don't know what they're doing, right? So you always have to worry about it. I like this one better because it did exactly what it's supposed to do. Energy's just a little light off that March 23rd low, but not that bad. Again, on this one, a pullback to probably about $7.35, $7.40, I think, somewhere in that area. If we get a little selling in this thing and the volume dries up, I think that's the part where you get the next ABC back up above probably 850 and maybe into that 915 level spike from January 25th. So we have that one handled. Röntgen was the guy that did the x-rays. Yeah, he was the one that did his wife's hands. Thank you, Paul. I'd forgotten about it. Just a lot of stuff going on. Anyway, we'll be back. Give me a call, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. John from Philly in the Den has posted a lot of good titles out here that show that there's some fairly interesting patterns developing. Yen, which is the direction daily China Bull 3X, quite hasn't made it down to this 29.56 low. That had a 3 million share low, but we're down today with 885,000 shares. So we're going to attack that low once again on lighter volume. I love this consolidation coming out of this. And again, I wanted to see some kind of reversal signal, which we haven't quite seen yet. Maybe get 29.56 or very close to it. At this level, if it comes down 1/3, you really don't have to have, at least in my opinion, the test of 29.56, although you would love to see it. But my guess is you're probably going to see a push lower on Monday or Tuesday, one of the 2 days. My guess is that's going to be probably about the closest to a buy on some of these that there's going to be before fund buying. So you want to keep a look and see, Tuesday, Wednesday, you get these push downs. They go lower. They don't develop any volume, and you put back in. But this yen trade and chart looks extremely good. And this one, I've played it a few times. It runs very well and does seem to work very well with price volume moves. So, but that would be it. Okay, ASHR. Yeah, we're certainly at an inflection point. That's certainly true. Harvest CSI Index. This looks like it wants to do kind of the same thing. You're back into these huge dojis of February 9th, 2850, 5,250,000 shares, about 800,000 shares today. So there's some really good looking charts. Thanks for John from Philadelphia for putting those tickers up. My guess is that I'll probably hit these in my scans in the next day or two, but we'll keep an eye on it. Okay, what else does go on here? I think I got some more emails. Let's take a look. Okay, question about IBM. Let's take a quick look at that. Down at its previous low, 144.55, so 15 cents over the February 9th low that had 7.8 million shares. It's got 5 million shares. So that one's going to be light. And, of course, one of the worst offenders on earnings is down 20.4 million shares on that day. So you're probably going to blow through that for at least a little while, maybe half a day. If it closes back above it, that area looks like fairly decent support. What else do we want to look at? I wanted to look at AAOI. Somebody called in about it yesterday or the day before. I can't remember. I thought this thing going into the bounce was about everything you could get. Man, this actually did a lot better than you would think. It had a nice day yesterday, actually following through today, filling that gap. But again, you're going to be doing that on lighter volume. What was that on the downside? 10.6 million shares compared to the 2.4 million shares up. So you've got that on fairly lighter volume. Okay. Let's go ahead and look at some of the ones that I was looking at from yesterday. There's not that many of them. Well, let's go through them as fast as we can. Celadon, CGI is the symbol on this one. Kind of interesting. It's kind of a penny stock, but not bad looking so far today. What do we have? Okay. 355 at 647,000 shares compared to the 286,000 shares. Let's take a look at CVI. This one's back up to its spike of February 22nd at 35 bucks that had 870,000 shares with this 300,000 shares. So this one would be on the weak side, CVR Energy. Keep looking at that. FLIR.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Got just a handful of minutes. Are we going to do a commercial? Or are we just going to run through till the end? I guess we're out of the commercial, so we've got a 6-minute segment here. Okay, let's see. Got anything else up here? Check how the market's doing and take a look at the volume. But again, we've got options rollover. I took off all my equity positions by Wednesday. So we've been sitting here waiting for the retrace to take a look and see what it did. So far, the volume's not all that exciting. So we'll see. Now, maybe volume comes in on Monday. Maybe everybody's wandering off the reservation today, but we'll see them certainly back by Monday. Right now, just 4.1 billion shares. I think we did 6.5 billion shares or 6.8 billion shares yesterday. So there isn't a great deal going on in that. We talked a great deal about the put-call ratio this week and how it kind of showed on Tuesday that everybody had given up shorting and the market turned almost within, I don't know, a couple hours of everybody deciding that it was time to buy calls. Same kind of thing at the bottom when everybody wants to short, pretty good time to go long. And we'll just have to see how that does. But, we're at 2668, off 25 points, but not any kind of huge volume. Question is, at one point, if we are going lower, these volumes should pick up. They're just not that much. And on an expiration day, you'd think that they would be a lot higher, but they aren't. So we can look at it. Anyway, Dow's off at 223, NASDAQ's off 94, the Russell's off 8, which is about 0.5%. Of course, the NASDAQ taking the brunt with Apple today. I wanted to look at one other stock. There are a few. Oh, am I? Oh, I'm still on the break here, it says. Okay. I wanted to look at this one. There are a few stocks out here that are looking a little weak. The one that I would love, but I'm going to give it a few more days, is First Solar if you wanted to go short. January 11th, $76.70, $76.61, 6.3 million shares, got into it with 4 million shares. I would have liked to see just a little lighter, down on not much volume today, so you have to start looking at a lot of these that are probably going to carry on into earnings. And that means that you have to go through earnings and sit on your hands. I just don't like it. I would much rather wait until the other side of earnings on many of these. In fact, let's check on this one real quick because I think it's in here. Is it that one? That one? Okay. And what is this? FSLR. To take a quick look. FSLR. Okay, April 26th. So you've got that one being next Thursday. Again, like I said, every one of these that I see up here on light volume, we're within a week or two of earnings, and these stocks can just go sideways for 2 weeks while they're waiting for it, even on the light volume. I think we're going to get some surprises on it in earnings, both up and down. But again, I haven't been believing that we're going to blow out the top anytime soon, maybe next fall. And it really hasn't looked that bad. We've done some fairly decent tests of lows on a lot of stocks, but that doesn't mean that we've got enough to blow out the top or push higher out of it. Now, we could be in this kind of consolidation range for a little while, certainly probably through the first week of May, until we get some of these, a lot more of these earnings under our belt. So that's kind of it at the moment. I got a lot of interesting stuff to talk with Tom O'Brien today at 3:30 with our Tech Insider Hour, which we will do then. And other than that, have a good weekend. And we will see you here Monday, same bat channel, same bat time. And remember, sell when you can, not when you have to.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.